Great. Well, look, I'm delighted to welcome Charlie Delingpole to the show today. For those of you who don't know Charlie, he is a serial entrepreneur. I think that's probably just about fair to say, Charlie, from looking at your background. And the CEO and founder of ComplyAdvantage, one of the fastest growing fintechs in both Europe and probably the world as well. Charlie, welcome to Fin Spotlight. I'm delighted you could join us today. Maybe to kick us off, for those people who don't know ComplyAdvantage, maybe you could just give a 30-second intro to who ComplyAdvantage are and what you guys do.
Great to be here, Matt. So ComplyAdvantage are a company that provides solutions around money laundering, terrorist financing, and compliance. So we have the only real-time database of money launderers, terrorists, and other high-risk entities in the world, and then various solutions around that for screening, monitoring of clients, and also transaction monitoring, payment screening. So everything around financial crime risk.
Great. I think there's like a lot to get into today. There's lots of subjects we want to cover, but look, I thought first it'd be really interesting to actually just go back a little bit and sort of find out a bit about your journey before ComplyAdvantage and actually how you came to sort of start a business fighting financial crime. So do you want to just give us sort of where did your career sort of start, and how did you get into financial crime and make that decision to sort of start a business in this space?
Great question, Matt. So the real genesis, the kind of Damascene moment, was when I was the money laundering reporting officer by default of the second company that I started. So with Market Invoice, we are lending billions of dollars and pounds to companies that we've never met beforehand. So you have to onboard them, you have to take money from investors. And because the banks weren't lending, we built a kind of eBay for invoices. So huge amounts of money flowing around. And given I had a tech background, I assumed all the responsibilities around onboarding, monitoring, screening, and the systems and software there were really terrible and really painful. And I didn't like the risk of going to jail if something went wrong. Like anyone who's running a company, whether it's a startup or a scale up or a big listed company, will know that the biggest pressure is always on revenue and growing faster and burning less cash. And that's the real metric. But then with finance companies in the background, there's this thing that if you screw up the money laundering side of things, then the terrorist will win and you'll go to jail and you'll be fined billions of dollars. So I really didn't like the fact that that was done so badly. And so I just felt that if there was one good company that could build it for everyone, then everyone could share that infrastructure. And I think with the emergence in Google, Facebook, Amazon, all these technology companies, all this cool technology, if you applied it to financial crime, then you could do some really cool stuff. So, and that's what we've done now. And yeah, I think that same theory holds true.
So you kind of sat there as a money laundering reporting officer thinking, I don't particularly want to go to jail and these aren't great solutions. What were you sort of thinking about at the time? Like, what were they not giving you? Were they just not giving you things quick enough? Did you just not think they were up to date? What too many false positives and you having to work through them? Or what were sort of the problems you were seeing, and how did that sort of form your vision for what Comply would be?
The first client we had was a payment company in Mayfair opposite the Saudi embassy, and they were sat there receiving truckloads of cash from Southall and Ilford, sending it to Afghanistan, Pakistan, Somalia. So problems with Al-Shabaab. And so the founder of the company was like, listen, huge problems with being shut down if Barclays or other banks choose not to deal with us. That's existential. So you need to find a solution. And the systems they had there were terrible. And I previously worked in like M&A, JP Morgan. So the clients I had then were the incumbents like Reed Elsevier, Dow Jones, LexisNexis. And the software that they were confronting us with was in my view, like archaic, and you could see the interface and the systems and processes and the mechanics behind it were obviously a function and a vestigial like artifact of the fact that they bought every other company and they hadn't invested, and it was kind of an oligopoly. And so it just seemed like the actual system that you saw was a manifestation of the industry structure, and also of the kind of way in which the industry had evolved around like post 9/11, in terms of it was about it was about how all the companies were priding themselves on numbers of researchers, as in we have 400 researchers,
Yeah.
and therefore we can accurately track all the risks. But if you have 7 billion people in the world and how many billion companies, then it's impossible to keep up to date with that. And therefore, the answer was to rebuild
Not people.
everything. Yeah, so the answer was computers, not people, in terms of, so the answer was to re-architect the entire data system from scratch using like machine learning and like different technologies which are only recently available. I think if you tried to do what we were doing beforehand, it wouldn't be possible. So it's kind of, it was more like a thesis around the possibility of technology and the industry structure and how it had evolved and how you could replace that if you built it in a much better way.
It's kind of taken a massive problem though, and obviously like, you know, those other incumbents have been around for years building those databases. So you were taking sort of a huge problem on when you thought, okay, well, look, there's an opportunity here. What sort of, I guess, from a personal point of view, was your the moment you thought, yes, this is something I'm going to do. I'm going to sort of step out of this business that, you know, I've been a big part of as well, and start Comply. And how clear were you on what the product was going to be at that time, or, you know, or did that come a little bit later, sort of?
I think as soon as I walked in, I saw what they were doing. I was like, right, I'm doing that, because it was just obvious, right? It was just kind of like I didn't have much choice, and it was like, as soon as I saw what they were doing, it was kind of very obvious that there was a big opportunity, and it was a good business to build.
And so you step out, and what year was this then? Was this 2014?
14.
What does sort of the first year sort of look like in Comply? You know, obviously taking such a big problem, you know, you're thinking about, right, we're going to build out a database using technology rather than people. You know, there's a sort of a critical, was there like the first year just focused on building that product out, or how quickly did the first client sort of come along as well?
So the first client agreed to work with us before we had anything. It was like, listen, we'll pay you to build it up. And so, but at the same time, they were introducing us to the National Crime Agency, the FCA, HMRC, the Treasury, many banks, many of their partners. So I think it wasn't just optimized for that one client. It was, they were kind of helping us speak to a whole range of partners in the industry. So, and then they had 100 clients themselves. So I went and met all those clients, right? I went to like Southall and Ilford and all these places, right? So yeah, it was kind of a much more industry-wide thing. And also having built a fintech company prior to that, I could see the kind of wave of money coming into fintech as well. And I wanted to be a supplier rather than the principal in that market. Although, you know, like I think all those companies have done well too, right? So
yeah. And I guess with that approach of having clients kind of on board before you even sort of decided to do it, you kind of went hand in hand. Was funding relatively easy at that point to go and get investors on board, or was it still quite a difficult sell at that point? So look, what the idea here is we're going to use AI and sort of disrupt this marketplace in some ways, because everyone's using people, or predominantly people, to do this.
So when I left my previous company, we had exited some of the investors that I put into that, and they all made lots of money. So they were all like saying, hey, I want to give you money. But I didn't want to take the money immediately, because I didn't want to like force myself down a path which wasn't necessarily going to work. So I personally put in a few $100,000 as well of my own money before I took external investment. So that meant we can move like immediately. And we also had the client paying us as well, right? So before we raised any money, but then we raised money as well as soon as kind of we had everything live and something working. And so yeah, I think we also deliberately didn't kind of go to market more broadly until we had the basics of something which could scale, because the challenge with the kind of AI driven system is it's very difficult to get to parity, as in it takes a long time and lots of money and lots of improvements to be passable, I think. So and I think lots of people also felt that the sheer scale, breadth and depth of what we were doing was impossible in terms of tracking every person in the whole world and every risk. It's kind of, and distinguishing fact from fiction or fake news. And so that definitely took lots and lots of time. And I think I didn't want to go to market with something which wasn't viable.
So what was your first what problem did you carve out first to go, okay, well, we're going to tackle that problem first, or like specific segment of that? And I guess how long did that first iteration of the product before you went live actually take to kind of get together before you were satisfied that it was going to be passable, as you say?
So I think the end vision was kind of clear on day one, and I think it was always kind of subordinating that activity towards something which I knew was kind of many years out, right? So that the end vision was like every person and company in the world and every risk connected. Like, so but also in terms of the data structure, structuring it not around consumption, but around an ontology which would allow you to discover connections and patterns which weren't possible, right? So the thesis behind the company wasn't just like marginally better, right? It was to solve the problem, because companies were being fined and still are being fined billions of dollars every year by regulators. Terrorists are still like managing to get through. Corruption, bribery, like still huge issues. So I wouldn't have started the company if there weren't big problems, right? So the kind of immediate goal was to solve that problem, but then to extend the breadth of data, right? So with each new data set we add, we have a new product to sell, but also augment the initial products. But fundamentally, the goal was to solve the problem once and for all. So working back from that, we made architectural choices not with a view to the short term, but with even though it might take twice as long, we'll do it because that will mean we can go faster down the road. So and therefore we kind of didn't do any PR or because if we were architecturally correct, then it would have its own momentum and force, and I wouldn't need to optimize around marketing.
Yeah. So I mean, it feels like that those decisions early on have really sort of helped you, or certainly paid off. Now you probably call the medium term, at least as that sort of, you guys seem to have grown extremely quickly over the last 6-7 years. How quickly was it when you sort of got the product live, then that you started to build that momentum with clients? It sounded like you obviously already had a lot of a sort of a good network or prospective clients already to go to and you're working with. Did you manage to get some momentum pretty quickly then and feel like you were making good progress from a client point of view and hearing their feedback and getting their input into how this needed to work as well?
Yeah, I think the thing about building a company, I think, is that it's very slow at the beginning, as in if it's like an exponential curve, then the first 50% of time you only make 1% of the progress because it's all kind of very low base. So I went from running a big company right back to like my garage again, and it was kind of like doing very small deals, right? And burning like frightening levels of cash, right? So and it took like many months to get the first client for the kind of new product, basically. So it was actually extremely slow, and you wouldn't have done it, I think, if you didn't have the end vision in mind, right? Because like to kind of fight that hard for scraps, I think wouldn't be appealing otherwise, because you have to have the end vision in mind, I think.
It's really interesting doing a startup in this kind of space, which, is I think quite different to doing a startup or a technology startup in other spaces where they're sort of turning you to get to market, find out product market fit quite quickly, and test out different things. Almost in a risk space, that same leeway doesn't really exist when people are, as you said, MLROs and others are making decisions based on, and these could impact whether they end up in front of, in the dock at some point. So how did how did it sort of, you said you guys went it felt like it was pretty slow at the start. How did you sort of see that, this sort of journey different to, I don't know, maybe other technology startups where you're like, look, we need to have a product which is pretty robust come day one, otherwise it's gonna, we're gonna let our clients down here?
Yeah, I think like my second company could have functioned with like a phone and a bank account, right? In terms of you're simply lending money, right? So and it's very easy to lend money, but much harder to get the money back. Whereas here, I think the beauty of like a data business is that it's seemingly impossible to compete with, because if you miss a single connection or a single data point, then then you fundamentally have to reinterpret that entity. So if you think Matthew, isn't connected to this politician or isn't connected to this entity, then therefore he isn't a terrorist or isn't linked to the North Korean mafia. Whereas as soon as you have a digital data point, then that kind of fundamentally reevaluates everything about that perspective. Or similarly, if you're missing a date of birth or a fact about an entity, then you'll certainly deluge with false positives. So we have clients now in 80 countries and every industry, every geography. So it's it has to be a global data set, right? It doesn't make sense for it to be two companies, right? It makes sense for it to be a single massive database and graph. So it lends itself to massive scale, and that's why I raised 100 million to date. So I think if we're building a kind of niche workflow system, especially for the Iranian banking industry or especially for online brokers, right, then 50% is good enough, and you can optimize it around their needs. Whereas like for us, it's the data ultimately that's the powerful thing that will solve problems, and therefore it has to be as big and as scalable as possible.
I mean, I think you just alluded to like how sort of the bigger challenge you guys are trying to address and do that all within one database. And if one, anything data point that's missed kind of makes you reevaluate things as well. What have been some of those main challenges that you guys have faced along the journey so far, I guess, in building the database, the product, and sort of, I guess, thinking about those challenges along the way, what have been the sort of main sticking points that you guys have come up against where you're like, this is a really tricky thing, how are we going to overcome this?
I think the core mechanism, I think it's very difficult to turn like capital into software. And in terms of it, you can't just dump like $100 million onto a company and expect it to become a system overnight. It has to, there are thousands of architectural choices and systems, and it has to evolve correctly according to client demand, right? I think for us, we try to have a clear vision in terms of constantly expanding, deepening, enhancing this risk information graph with more data points, more facts, more connections. But also, I think in terms of choosing which algorithm or choosing which API endpoint to address, or choosing all different ways of going about that. There are kind of many dead ends and many ways of wasting money, or in terms of getting different teams to function correctly internally, or different squads or different org structures. I think, we now got approaching 300 people in the company, and I think coordinating that and making sure, that there's, I don't know how many different sub-services we have in terms of the overall stack, but there's kind of thousands of different services, each coordinating in teams, and which is obviously very different to kind of the challenges that we faced early on when it was much more simple. But I think any complex system evolves from a simple system. So I think that's the kind of evolution you have to go through.
I think you just said you're up to 300 people. How, and some of the stuff you guys are doing is obviously extremely complicated with, you need some absolute specialists to do that. How important has the sort of hiring of the right talent and forming the right culture in the organization been as well? Feels like it when you're scaling a business as quickly as you guys are and addressing such tricky problems, it must be absolutely crucial. What are the sort of the key lessons you've had either sort of before Comply or during your time at Comply about hiring and culture, which have really benefited you?
I think important things are offering a career path to developers in terms of like not just like software engineer, but also kind of senior software engineer or principal engineer, or I think giving them a career path which allows them to develop. I think also what we've tended to do is I think we've learned that it probably makes more sense to have a few more highly paid engineers rather than much more juniors. So I think the kind of the experience and cost of developers has increased over time. So yeah, I think like we have the financial firepower now to be able to afford that. So I think although they're kind of there's like approaching 300 people, I think the kind of cost per person has increased over time. And I think the beauty is as you get bigger, you can hire some fantastic people, right? So, but I think that's only been enabled by the underlying financial firepower we have in terms of the ability to just invest extremely heavily. And also, I think it's the ability of the investors as well to like we managed to assemble an investor base that believes in what we're doing and have the vision to pay huge sums in order to be part of that journey, right? So the vision's only possible if you have backers that believe in what you're doing and understand the complexities and need for it. So and then in terms of culture, I think adapting culture to the business which is relevant to you, like as in we're not mining coal, we're not manufacturing cars, we're building a complex system which requires many interdependencies and many different ways of investigating dead ends. So yeah, I think it's a challenge which has been a good stretch, but I think there's no point trying something easy. I think I think part of the value is the impossibility and complexity of what we're doing, which would dissuade anyone from trying to replicate what we're doing.
I guess from a sort of cultural point of view or sort of employee proposition as well, it's obviously an interesting thing to join a fast-growing scale up in a sort of what you're trying to do, which is fight financial crime. That must be quite an appealing thing for people to come in and be like, can be part of this journey along the way. And I fully agree with you in terms of a few highly skilled people can often be better than an army of not very skilled people, right? What have been some of the, I guess, key milestones along the journey so far for you personally in terms of how you guys, what was it? First client must be a pretty big moment. Have there been other sort of significant milestones along the way you've thought, okay, look, we're getting somewhere here. This is kind of going towards that vision that I had when we set up the company?
I think the obvious milestones are kind of around the funding, so the Series A, B, and C, and then I think we've kind of hired a very different team in the past 12 months, which I think has had a great impact in terms of we brought on board a new CTO, new COO, CMO, many new managers. And I think ultimately it's about the people that you have in the team. Like I think great software is built by great engineers and great designers. And it's about getting those people on board and giving them the right institutional framework to be able to innovate. So yeah, I think in hindsight, the key milestones have been about getting the right people on board. I think ultimately it's all about customers, but I think we've always chosen not to be subordinated by any particular customer roadmap and always have the vision in mind.
Okay. I wanted to get onto as well, like what the solutions are specifically. I mean, you guys have built out sort of a different set of solutions over time, and everything's obviously focused on the AML, on AML really. How do you guys feel like, obviously you talked about how you guys are building the database in a different way, but obviously, and you saw a lot of the sort of problems with the sort of traditional players in your previous work. How do you guys feel like you're doing things significantly differently to others, and sort of why is somebody sort of maybe choosing Comply or to replace an incumbent with Comply?
In terms of differentiation, the core differentiation is data driven by algorithms rather than by people, and the consequences that flow from that in terms of objectivity, speed, breadth, but ultimately false positives and false negative rates. So like the actual value in terms of cost and risk. So we'd argue, and we can demonstrate each time, that it's far superior, as in you'll miss fewer bad people and catch less irrelevant matches, right? So therefore you'll have far lower costs and far lower risk, right? So yeah, I think that's the core demonstration of what we're doing and why it's valuable.
How often I know proof of concepts are a very popular thing these days. Are you often brought, what kind of percentage of clients are asking for you to do POCs and those kind of bake-offs with maybe incumbents or others?
Vast majority, and there's like hit rate tests, like match rates, so. And I think we prefer that, because then it's not like our brand's been around for 100 years and 30 years ago, therefore we'll choose you. It's like, actually it's better. So I think our brand is weaker than like, a Reuters, which was founded like 100 years ago, or like a LexisNexis, which is far larger. So I think where it's on like objective performance rather than brand, then we'll win.
And so, I mean, what do you see as some of this, I guess, in general, there's quite a few challenges around AML in general in the industry. What do you see, outside of what you guys are doing and trying to, build solutions to tackle this problem? What do you see as some of the bigger industry challenges around, financial crime and AML, or solving AML right now? Maybe that's a big question.
Yeah, I guess there are different ways of answering that question. In terms of like what we've seen evolve globally, you have different mechanisms around ultimate beneficial ownership and register there. So like the AML Act 2020 in US stipulated that FinCEN would be the vehicle through which UBO would be transferred, whereas in the EU they've gone for registers. You've had in the Fifth Amendment Directive data around cryptocurrencies, around the limits on prepaid cards. You've seen in the US the OCC stipulate different proposals around unhosted wallets. So those are some of the kind of recent legislative points that have been acted upon. In terms of like the broader thematic shifts and debates going on by entities like FATF, it's around data sharing or privacy enhancing technologies, or because I think it's difficult to know what's happening inside different divisions of a single bank, let alone between different banks. So and like in terms of block list sharing and how you can do that, like that's actually very challenging, because there are questions around the privacy foundations of that, but also most entities see it as additional overhead, which they aren't obligated to do with much real benefit.
Yeah. And how much do you see, I mean, when in terms of your solutions, you guys have screening solution and you have transaction monitoring solutions. How close do they work together, or are they in terms of, and how are you encouraging people to use transaction data and screening data together?
So I think there's a lot more potential in terms of how you can unify both the screening and the transaction monitoring. I think in particular around like risk rating, in terms of you can assign a number to the risk and then sort by the risk, and if the entity is high risk anyway, then so I think it's having a connected system which takes into account all the information as an analyst would, makes a lot more sense.
I mean, just looking at the sort of trend in the industry as well, do you think there's sort of an increased willingness now over the last couple of years to look at solutions like yourself, like what Comply have done as well. So I know probably a few years back, and still the sort of commentary in the industry about AI. People have been pretty nervous about it. Did you face a lot of resistance to around the method you guys were using as well? And do you think there's kind of been an increased willingness over the last few years or acceptance about what it's doing and getting comfortable with it as well?
Yeah, I think the whole digital transformation moniker implies that there's lots of legacy technology and there's a huge opportunity in terms of upgrading. So I think the fact that we've grown so quickly and had such brighter adoption is a testament to the fact that it's more effective and we're on to the right way. I think like if we carry on growing at the rate we are now, then we're actually quite a decent sized company quite soon, right? So, and I think most companies, you're going to triple, double, like that's the direction you want to go on. And it's kind of rare to exceed that natural threshold. I think we've been helped by the fact that the underlying client base is growing so quickly. So I think like there's different forms of AI. There's like, fraud-based detection based upon true positives and training data around that. There's like AI around facial recognition. I guess our AI is more around data ingestion. So it's kind of like technically it's AI, but it's very different to other forms of AI.
And is that something you've been challenged on through the journey in terms of people being nervous about that, or has that been something that actually has not been too much of an issue? I mean, we hear a lot about people being like, "Oh, with AI, can we get comfortable about the being able to evidence what it's doing?" And that's maybe not really applicable in your sense, though.
I always thought it was about like not how the burger's made, I always thought it was not how the mincemeat's made, but how the burger tastes, right? So who cares if it's done a particular way, so long as it prevents like deaths or prevents murders or costs, right? I think the actual architectural mechanism should be subservient to the outcome for the customer. And I think people don't really you can talk about AI, people don't really care. What they really care about is doing their job more effectively.
Has the data come through? Is it am I getting fewer false positives than what I was getting before?
Yeah, I think, but the challenge is not just less than before, it has to be like 10 times better than before to make the shift. And so our kind of threshold for success is way higher, right? We can't just be as good because we're a new company. We have to be 10 times as good. And if we spend how many tens of $millions of this year on technology, then each year it's improving. Whereas I think the incumbents are staying still.
What's the sort of the next, you guys obviously I'm sure have a very, very full roadmap over the next few years. What are you guys focused on doing in terms of the product, the solutions, and developing out kind of the capability of them as well?
So I'd say a big part of it is going to be just improvements in the data, which are seemingly imperceptible, right? As in going to be broader, deeper, more accurate, more connections, more facts, and like that's the same, I think. And then, but also expanding across entities. So having lots of companies in database, facts about companies, ownership, linkages. So that's the element, right? So we'll make much better choices, have much more information, much more facts, and just constantly delivering upgrades around that. So yeah, it's just kind of the scale, breadth, depth of the database.
Yeah, and maybe just to sort of think about, have you got any sort of I was thinking about this earlier, but any sort of main sort of frustrations at the moment with how I don't know where the broader industry is or anything like that. Sort of, I was just thinking, what are your sort of, when you look at the industry and where it is today, are there any sort of significant frustrations you have about where it is or where it's kind of some of the efforts that have been put into AML?
I'd say the thresholds in the US are quite light in terms of most companies only have to screen against US Treasury OFAC list, which is actually 7,000 names, right? Whereas we have like 10 million names, right? So I think regulation is where it is because of the technology that's possible. And I think as that rises, such the regulations will increase as well. So I think making payments to like Jeffrey Epstein's butterfly trust trafficking won't be acceptable in the future. So I think you've seen a trend in society whereby transgressions and moral outcomes are no longer acceptable. They were acceptable 20 years ago. So I think it's only going one way in terms of society and tech, and that will benefit us.
And maybe just a final question to finish on then is, in terms of where do you think you obviously set up Comply with a bit of a vision of what you were trying to do, and what 6-7 years into that journey, what do you think sort of the biggest opportunities are for Comply sort of in the next few years? We talk about continuing sort of building that depth and breadth of the product still. Is it just greater sort of greater coverage and being able to kind of cover more of what you fulfill that vision of the database, and also from a client perspective, what do you think is greatest opportunity for you guys?
I'd say we're still tiny in terms of market share. Like, even though we have decent size and scale now, I think like there's still huge upside just doing what we're doing better. And we're constantly releasing improvements, upgrades to the system, and that will mean that the clients have lower false positives, lower false negatives. We'll add in company data, which will give you data on counterparties. We'll add in people data. So I think there's like every person and company in the world and every risk about them, like that, and that can span credit, fraud, identity, and because it's in a single data structure, it's far more powerful. So that's like where the $40 million a year cost base is going, basically, into that.
Great. I think that's a good note to finish on. Charlie, thank you so much for being very, very open, and for all your insight there. Brilliant to have you on, and thank you for joining us today.
Great to see you, Matt.